This channel does not promote or promotion any illegal activities. All content provided by this channel is meant only for educational purpose only.
Hello everyone, I am JUNIEVILLE TORINO from Bachelor of Science and Information Systems. This video shows the 8 steps of accounting cycle. The accounting cycle comprises 8 steps businesses follow to ensure that their books are balanced so they can be closed reset for the next accounting period. When the cycle begins again, typically the domain of an accounting team or bookkeeper, the accounting cycle begins with the business events or transaction. The purpose of the accounting cycle is to keep track of all financial activities that occur during the specific accounting period, be it monthly, quarterly, or annually. In short, the accounting cycle verifies that every dollar going into or out of the various general ledger account is reported. These are the key pointers of the accounting cycle. First step in accounting cycle is to identify and analyze all transactions made during the accounting period, including expenses, debt payments, sales revenue, and cash received from the customers. During this initial stage, companies go through every transaction that affects their financials. Through this should be an ongoing step for companies that are continuously creating customer invoices, buying inventory, paying bills, making payroll, and collecting cash. The next step is to record the details of all financial transactions in chronological order as a journal entries, whether in an actual book or in an accounting program. With a double entry accounting, each transaction is recorded as a debit and corresponding credit in 2 or more sub-ledger accounts. Exactly when the transaction is recorded depends on whether the business prefers the accrual accounting method, as most do, or the cash accounting method. The next step is the journal entries are recorded and approved. They are posted to general ledger. The GL is the master record and summary of all financial transactions broken down by account. Unadjusted trial balances are prepared to make sure total debit balances are equal to total credit balance. This step identifies errors and anomalies that may have occurred up until this point by lining up debits and credits from various accounts in a single spreadsheet. If the numbers don't balance, a bookkeeper or accountant will need to review the transaction data entered into the journal and adjust entries accordingly. Step is continuation of the 2 various steps. If an error was made, it has to be corrected and recorded as an adjusting journal entry that reflects a change to a previous recorded journal entry. Additionally, manual adjustments are recorded in this step, such as accrual for the expenses incurred that did not make it into AP system before that account was posted to the GL, or for reconciling items uncovered during the account reconciliation process. Adjustments are made and account balances have been corrected. Financial statement can be created. Financial statement are accounting reports that summarize a company's activities and performance for a defined period of time, such as monthly or quarterly. The 3 key financial statements that companies generate are the income statement, the balance sheet, and the cash flow statement. This is the final stage of the accounting cycle, locking in the accounting period, closing the books, receipt temporary accounts on the income statement, such as revenue and expenses, to zero balances, meaning that they don't carry into the next accounting period. Net income or loss from the income statement is transferred to the retained earnings account, which is a permanent account on the balance sheet that carries over the next period. Of note, the resetting of account to zero does not apply to the soft close. These are all examples of each steps of accounting cycle. Thank you for watching and have a good day.